Welcome to today's webinar on what's the first thing you need to do before you start earning money. My name's Kim and I'm going to be your host today. I'm the founder of L&D Free Spirits. I've been in the world of L&D for nearly 20 years and I've been self-employed for 7 years. So I'm based up in Yorkshire and I'm joined today by Jim Oldroyd. He runs Bread and Butter Learning Solutions, and he's going to be keeping an eye on chat and making sure that everything runs smoothly. So the first thing you need to do before you earn money, what we're going to be looking at today is how you set yourself up from scratch. So we're looking at, are you using limited company, umbrella company, or are you registering as a sole trader? Those are the three things that we're going to be looking at. All right, so this is where I ask you, why are you here? So when I first started out, I had no idea. So I wish that I would have had a session like this so I knew the best way to do business. So that's personally for me that I wish that I would have had that. And that's one of the things that's driven setting up L&D Free Spirits is giving people all this advice and all this information for when they're first setting up. So Emma, thank you very much. Need to decide between sole trader and limited. Okay, so we're going to go through the pros and cons for each of those, and I'm going to let you know what the best way, well, personally, what I think is the best way, but obviously you need to do your own research and to decide what's right for you and your circumstances, but I'll take you through the pros and cons and everything. Okay, so Brian is exploring working for himself after September, coached and contracting. Okay. Well, we'll go through, like I said, we're going to go through the three different elements because depending on where you're working and how you're working may determine which one is going to be most suitable for you. Okay. Before you can send your first invoice, before you can land your first client and receive your first payment, you need to decide how you're actually going to do business. So the three options that we're looking at are sole trader, limited company, and umbrella company. Now, I've got experience with all three of these. So my two businesses, so I've got Go Ginger Learning Solutions and I've got L&D Free Spirits. They are both limited companies. I have also done contract gigs where I have had to work under an umbrella company under IR35, which we'll talk about in a couple of minutes. And my husband was a sole trader because he was a builder for over 30 years. So I've got experience of all of these different types of business entities. So your disclaimer is you need to do your own research to decide what is going to be best for you. But I've got experience in all three. So I'm going to be giving you my perspectives and just letting you know the pros and cons for all of them. Okay, sole trader. First pro, it's the simplest way to set yourself up. All you do, register with HMRC and boom, you're good to go. You can start trading straight away, pretty much. There's lower administrative burden compared to limited companies because all you need to do is put in your self-assessment tax returns every year, pay your tax, boom, you're done. Now, when you're doing your tax and everything, some people prefer to do it themselves. Some people prefer to use an accountant. I'm in the accountant's camp because I don't have the bandwidth to try and do my own taxes. So my husband, he would write in a ledger, literally writing with a pencil in a ledger, a shoebox of receipts, and then take it down to the accountants once a year. Get the tax bill, pay the tax bill. Another pro, you've got full control of the business. There's only you, no shareholders, you don't need to worry about anybody else, and all the profits will go to you. You don't need to have separate bank accounts. Everything can just go to you. You earn the money, you keep the money. Cons, you've got unlimited liability. So if you incur any business debts and you don't keep up with repayments, then they can come after your personal assets. So that is, for me, it's a big con. Um, Potentially higher tax. The more you earn, the more you're going to pay in tax. You may find it difficult to get investors to raise money. So if you were wanting to get an office or something like that, you may find that difficult. Limited business credibility. Now, this one was one of the main reasons why I decided to go limited company was because if I'm doing business with a company, so if I'm doing business with a client, I need to make sure that I can get paid. I need to make sure that they're legit. And that means I'm going to search for them on Companies House and I'm going to say, how long have they been trading? Does anything give me the ick? Does anything feel a little bit dodgy? So sole traders don't have that. If you search under somebody's name, or if you search under a business name, if they're registered as a sole trader, you cannot find them on Companies House. So for me, that was the reason why I didn't go down sole trader. My husband, self-employed builder, it was fine for him because that's how a lot of tradespeople would work. So yeah, fine for him, not for me. Okay, limited companies, limited liability. So if I incur any business debts, they are not going to come after my personal assets, only the business side of things. It's providing a significant amount of financial stability. The tax benefits, there are some potential tax benefits in there. With the sole trader, everything you earn goes into your profits pot. With the limited company, you pay, it sounds a little bit backwards that there's tax benefits because you pay corporation tax, then you pay your personal tax, plus you've got your national insurance. So you're essentially paying your three things versus sole trader that would just pay their tax and their national insurance. But the way that you can work it is you can pay yourself a salary through the limited company, plus you can pay yourself dividends, and the tax ratings are different than if you're just paying your tax on on your personal earnings. So there are some benefits to doing it this way. You've got the enhanced business credibility because you're on Companies House. People can see how long you've been trading. People can see that you put your books in on time. They can even look into a segmented part of your books to see what you've been earning, so what your annual turnover is. So some people like that idea, some people don't. But anyway, it's easier to raise capital. So if you want to expand, because you've got this increased business credibility, people are much more likely to invest in you. Next up, we have the cons. With sole trader, you register, boom, you go. With limited companies, you need to submit annual returns. You need to prepare your financial records. You need to do a confirmation statement. There's things that you need to do. I don't worry about that because my accountant sorts everything, basically. Another yay for the accountants. It is more complex to set up and there is compliance around that. But if you use a company that sets it up for you, some accountants will set it up for you, but I use Companies Made Simple for both of my limited companies. Literally 15 minutes, got it set up. They do all the filing behind the scenes, and then 24 hours, 48 hours, you're ready to start doing things. It is a separate legal entity from its owners, so it does have rules and regulations for how the business operates. So, for example, you can't just have your personal bank account. You need to have a separate bank account. You need to have a business bank account. Now, I've got business bank account with Barclays for Business, and I've also got one with Revolut. For ease of setup, I say Revolut was really good, and it's got a really nice user interface on the app, and you can upload your expenses and things like that. So Revolut is a big winner for me at the moment. And then you've got the umbrella company. Now, before we look at the pros and cons, I mentioned IR35 earlier. Has anybody heard of it? Jim, have you ever worked under IR35?
I haven't. No. I was
No.
once offered a gig very early on in my freelancing career, um, but it wasn't actually worthwhile doing in the long run.
Hopefully you can hear me now.
Yes, Ken, thank you.
So I think so. IR35. My understanding is that there's been a lot of issues previously with disguised employment, with companies having people working on contracts but not being employees. And I saw that a lot in the IT business in the city. And IR35 was brought in to essentially say, if you are working for the same company for X amount of time, you are an employee, and
Mm,
it can affect your tax status like that. But I know it's been quite controversial, and it's affected people who are, genuine freelancers, have been
yeah,
quite disadvantaged by it, I think.
yes. So you're absolutely right, Brian. It was a piece of legislation that was brought in to prevent hidden employees. Um, Now, what that meant was, I think it was a few that ruined it for many, if I'm honest, because you had some people who were being paid quite a hefty amount on day rate contracts, and they were with these companies for years, you know, and they were taking all the money. Yes, if you're under, if you're a contractor, you don't get your sick pay, you don't get holiday pay, all of that. You don't get the company benefits, but you're compensated with your day rates. And they brought it in to stop that from happening. Now, the thing with IR35 is it really applies if you're in a contract, a fixed term contract. So usually with it, it's over 3 months, I think it is, and if there's more than 200 employees. But there are different rules for different entities. What it means is that company, now it's mostly public sector companies that will impose AR35, and it's usually going to be on jobs that you land through recruiters because they'll do the come work for us for 3 months, for 6 months, for 12 months. They'll do those type of fixed term contracts. Now, the the way that it worked for me when I did this gig for under IR35, it was with a university. And I went in through an agency and I had to use an umbrella company. I was not allowed to bill them under my limited company. So I had to go in through the umbrella company. So what that meant was I was essentially paying the out of my day rate. You're paying your recruiter fees. Fine, don't begrudge them for that because they landed me a gig. But I'm also paying somebody to do my accountancy side of things to pay me. Um, and then I was also doing other work under Go Ginger as well. So my accountant was absolutely having kittens because I was needing to pay my corporation tax, my normal tax, my national insurance. Plus, I was also paying tax under PAYE under the umbrella company and national insurance. So at the end of the year, it was like a big bag of squirrels because I'd paid tax on some earnings, not tax on some other earnings. And I was in this job for 2.5 years, it ended up being. And it was my accountant said it was just blooming awful because it was so much extra work. So I would say if you are going to do something that's under IR35, just consider, are you doing other work as well? And making sure that your accountant knows that you're working with these two different things. So let's have a look at the pros and the cons. First pro, reduce administrative tax. You're basically being treated like an employee. They're going to handle the invoicing. They're going to handle all your tax calculations, national insurance, all of that kind of stuff. You get benefits. So the umbrella company that I was working for or under, they would allow you to pay a portion of your wage to mean that you could actually then have paid holiday. I decided not to because I was like, well, if I'm paying for it anyway, then if I don't pay it and just take a day off, I'm no worse off. So, and then there's also, you can sometimes get sick pay with it. So they all do have different terms and conditions. You'd need to double check if you're using an umbrella company, what their terms and conditions were and if they were the right one for you, because there are several out there. Easier compliance with tax regulations, again, they do all of that for you. It is simple. Once you get set up, boom, done. They're basically your employer. Potentially you've got higher costs. Like I said before, if it's an agency gig, you may be paying a portion of your day rate to the agency and then a portion of your day rate, a percentage or a flat fee to the umbrella company. Some of them have weekly fees. When you weigh that up against how much it costs an accountant, it may be negligible if it's going to be worth it or if it isn't. My accountant, I think it's £700 or £800 a year I pay for my accountant. But I am quite needy. I do have questions quite often. So there is that side of things. So you've got to kind of weigh up how much are they going to be charging if you're wanting to do the contracting kind of thing, your 3 months, your 6 months, if you're wanting to work that way, then an umbrella company might be your easiest option because they're just going to handle everything. You do have less control over the financial arrangements. The umbrella company will dictate when and how you are paid. There may be issues claiming expenses. Limited company, sole trader, if you buy something for the business, I just, put it through as a deductible expense and then it comes off the overall profits. Seems simple. You'd need to check with the umbrella company how that actually works for that side of things. I know I've just jumped ahead to the last one, but anyway. And then you've got the fees that umbrella companies charge. You need to, like I say, you need to do your research, check with the umbrella companies, see if there's any recommendations, and make sure that they are the right ones for you. Any questions on pros and cons before I move over to talking about tax?
Kim, we've had a great question from Emma.
Okay.
Around preferences for being self-employed and sole trader or a limited company for organisations such as the NHS and councils. Have they got a preference from your experience?
I would say the more legitimacy you can give your business, the better. So I would always recommend going down the limited company route for that reason, because it's giving you that boost of legitimacy. If you are going to be working full-time, Monday, Friday, 9 to 5 kind of thing, they may ask you to go under an umbrella company, under IR35, because they're public sector. If they don't, then they may ask you for your company number, which you're not going to have if you're a sole trader. You will have it if you're a limited company, but not sole trader. I've heard of that happening when people have been wanting to do business as an associate for another company. They've said, oh, what's your company number? So you have to be limited to get that versus your sole trader. So I would say that being limited in that situation will give you more gravitas, but it may not work out for you. It depends on the type of work that you're doing for them. They may say that it's within IR35. All right, so talking about tax. Sole trader, you are personally responsible for paying your tax. You need to pay class 2 and class 4 national insurance contributions, and Income tax rates will vary based on your total income. If you earn more, you pay more, basically. Additional rates may be applicable. You'll need to complete your self-assessment tax return every year. If you don't, you get penalized. You know, they'll fine you and things like that. Limited companies, you will pay corporation tax. You will pay income tax on, you know, your personal profits. You will pay national insurance contributions. So it seems like you're getting taxed 3 times, but because the tax rates are different, it can mean that you end up paying less. Now, I'm not saying dodge tax or anything like that. That's not why we're doing it. It's just that because you're paying yourself differently. The way that I work it with mine is that I pay myself the minimum wage every month, and then when I need a little bit of extra, I'll give myself a dividend, which then has a different tax rate than the minimum wage. So it works out, that works out better for me. Setting up paying myself the minimum wage, my accountant does all that. She charges me, I think it's £15 a month for the PAYE side of things. Every month she emails me my payslip, and I then pay myself, get that filed in my spreadsheet and in my folders. So I've got it reported that I've paid this tax, I've paid the, you know, the national insurance, and sorry, not the tax, the national insurance and all of that side of things. It's worth noting with these two, if you earn over a certain threshold, you may need to go VAT registered, which brings with it a whole host of regulations and additional reporting and things like that. And you also have to then include VAT on all of your invoices. So if you invoice for £10, you'd include £2 VAT because it's 20%. My accountant said to me, do not go VAT registered until you really have to. So I was like, right, okay, not earning that much at the minute, but okay, I'll keep that in mind for the future. Umbrella companies, they'll deduct your tax, national insurance, all of that, all sorted. All you'll get is your payslip every month. Your tax obligations are sorted. So it looks, on the whole, it looks like umbrella companies are going to be really, really easy, really, really simple. They're just going to do all of your tax for you. But just on the back of this, I personally wouldn't work with an umbrella company under IR35. Just because sometimes my payslips were wrong, I had to chase lost payments, and the umbrella company that I was with wasn't very good. So you need to really make sure that you are choosing one that's going to work for you and that has really good customer service on it. Okay. Before we talk more financials, you may have already guessed, I am very much in the camp of getting an accountant. Biggest piece of advice that I can give you, get an accountant. When Jim went self-employed, I was like, get an accountant. Best thing ever. Yes, you can do it yourself. You can do your self-assessment. You can do your own books. You can do it using Xero or QuickBooks. You can do it all yourself. But the time that you're spending doing that could be time that you are actually earning money. You've got to actually find the time to do it. And I'm not a tax expert. I know a little bit about it, but I'm not an actual accountant. So if I have questions, if I was doing it all myself, then I would be going to Google to get advice, which we all know that can be a little bit ropey. So for me, I would rather pay an expert to do my books, to make sure that everything is done so I don't have any issues, or if I have any questions, I know who to go to. They've got up-to-date knowledge, tax laws, they're making sure that you're compliant. It's reducing the risk of errors and penalties. It's going to save you a heck of a lot of time because you're not going to have to do your own books. At the minute, I pay about, well, I spend about a day a year making sure that my books are in order before I actually send them over to the accountant. If I was actually doing all of the workings out, it would take me longer than that. The biggest thing for me with an accountant is it's just the peace of mind. You know, I know if I've got a question, if I need to know, can I claim back for this? My accountant is just an email away, a phone call away. They've actually got an office down in the village where I live, so I can just pop down 5 minutes down the road. They're really great at giving timely advice. And it's always nice to support local businesses. You need to be thinking, when you're making these decisions about how you're setting yourself up, you need to be thinking long term. When you go when you go self-employed, I always say to people, the more money you've got in the pot, the better. The more money you've got means you have creative freedom. You don't need to jump on the first job that comes in. You don't need to take the first contract that is giving you the heebie-jeebies. It's not quite right. There's something a bit off about it, but you're taking it because you need the money. Having a nest egg will help you be able to decide what jobs you actually go for. If you are a sole trader and you don't have a business bank account, the money that you're making in the back of your mind, you're going to be thinking, I need to save X amount of thousands for my tax bill, for my national insurance bill, because they'll come annually. You won't pay them monthly. So for me, when I set mine up, I thought, well, if I'm limited company, then I've got separate bank account. See, when my husband used to get paid, all the money would go into the personal account. So every year he'd need to make sure that he had enough in there to cover next year's tax bill. And I've known some of his friends who've got to the end of the year and the tax bill's coming, they're like, I can't cover it. And then they've had to borrow money to pay the tax bill, which is nuts. So when I set mine up and I had this separate bank account, I always know that there's money in there enough to pay next year's tax bill, enough to pay my PAYE minimum wage for the next X amount of months. So I don't touch that for personal stuff at all. When I first started out from being made redundant, me and Jim got made redundant at the same time. And I thought it would be so easy to find work. I thought I can do all of this stuff. Registered my company. I built my website. It was a bit naff at the time, but then I got paid someone to actually build it. I thought I'm just going to put a post on LinkedIn and be like, yeah, I can do all of this. Didn't have any long-term plans. I just knew that I wanted to conquer the world. You know, this is global domination was the idea. And I got no work for 8 months. Actually, I did one job, which was $200 US dollars for an e-learning build. And that was it in 8 months. And I thought if I hadn't have had the redundancy money, I would have been up the creek without a paddle. It would have been really bad. And that combined with my husband being self-employed as well, it's a difficult thing to think about. You need to really consider it if you can. Like I said, the more money you've got in the pot, the more freedom you're going to have. So think about where you want your business to go. If scaling up, if you want to conquer the world, if you want to have staff, if you want to create an agency, if you want to create to go down the vendor side of things, then limited company is going to be your best bet, because you can add directors, you can add shareholders, you can get investment easier. you've got more credibility, you can scale up. It's going to be better for you if those are your goals, then going down the sole trader route. If all you want to do is the 3-month, the 6-month, the 12-month contracts, working within companies like that, then you might be fine with the umbrella company. But just keep an eye on your monthly pay slips to make sure that they're paying you right. I've been burned by that before. So you kind of got to think about, where do I want to be? What do I want my business to do? How do I want to grow? To then decide which of these is going to be most suitable for you. Now, there's nothing wrong with starting out as a sole trader and then in 2 years going limited. Nothing wrong with that. Nothing wrong with starting out umbrella company, then going to sole trader, then going to limited. You can do it in any combination that you like, but you'll just need to make sure that you're doing the relevant due diligence and paperwork and things like that when you're swapping things over. Next is, like I say, I know I've touched on this, got to keep an eye on your financials. The worst thing that can happen is you get your tax bill and you think, I've got to find 5 grand. I don't have 5 grand in my pocket. Where am I going to get that from? Because that is going to destroy your experience of being a self-employed professional. So you need to make sure that you estimate, use online calculators. If I earn this much in the business, how much tax, how much national insurance am I going to have to pay? Make sure that every month you're squirreling away a little bit of money so you don't have that moment of dread when the tax bill lands on your doorstep thinking, I don't have this. With limited companies, doing a mixture of PAYE or dividends can be absolute gold for you. I didn't do that when I first started out as limited. I just did dividends. And then when I'd built up enough of a float in there, I thought, well, now I'm in a position that I can keep it rolling. I can be confident that there's going to be enough money coming in to make sure that I've got enough to cover all of my outgoings plus my salary out of that as well. And then with umbrella company, making sure you're reviewing your pay slips, your terms and conditions, all of that kind of stuff. And double check the expenses on there. What can you claim back? What can't you claim back? Because you might be worse off if you have to pay for your own kit, your own licenses. For instance, if you develop e-learning, I have to pay for a storyline license. I've got a Camtasia license. I've got this. I've got licenses coming out of my ears. All of that goes through the business. If I was through an umbrella company, I don't know if it could. When I was on that contract with the university, under the umbrella company, I couldn't get any of the mileage back, the train fare, anything like that, any of the commuting costs or anything. Whereas if I was not working under an umbrella company, I could claim all that back. And you get 45 pence a mile if you drive. So it can work out quite well. Okay, so like I said, making the decision is a big step. You need to do your own research. I hope that this webinar has helped you and given you some realistic ideas about the pros and cons for each of them. You do need to think about 5 key areas to deciding when you're ready. What are your business goals? How much personal liability are you willing to have? How much personal risk do you want to take on? Which is going to be more tax efficient? Are you going to be able to handle the administrative tasks? Or are you going to get an accountant? How much flexibility, how much control do you want to have within the business? If you set up a limited company with 2 or 3 other people, then you're all equal shareholders. It's like running your business by committee. That might be fine, depends how you want to run your business. So you need to decide what you want to do, where you want it to go before you decide on one different type of entity.